This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 9:16 p.m. on a very stormy evening here on the waterfront across in Jersey City, across from the New York City waterfront. Well, on the waterfront. It is 9:16 p.m. on August 22nd, 2019, a very auspicious date because tomorrow, Friday, which is August 23rd, at 10 a.m. in the morning, we are going to get one of the most pivotal and important and critical speeches on the macroeconomy, which affects the US as well as the entire world, global economy, and that comes from Chairman Powell, who is going to be delivering a short speech from Jackson Hole, Wyoming, where all the big shot Fed governors from all different parts of the world, as well as business leaders, meet on the economic symposium that happens every single year. So, saying all that, I just want to keep you guys abreast on a couple of things. And while I'm talking, I'm just going to switch the screens around so people don't really get bored. And more importantly, this is the futures market, which looks pretty damn good. It's up about 6.5 to 7 points. And you can see that on the charts that we don't have any technical damage whatsoever, despite the tight range volatility that we encountered all through the day and that we encounter every single day. So that's good. So bottom line is really simple here, and I'll be very straightforward, as I've always have been. It doesn't matter what my charts are. It doesn't matter how good these charts are. But the bottom line is that tomorrow is going to be a highly volatile day, period. Now, the bears will say that tomorrow will be the end of the bull market, and the bulls will say, hey, even if we fall a bit, we know what the ranges are. We know what the gap fills are. We know what the Fibonacci 50 retracements are. We can even come all the way down to 2,800, which would be pretty frigging dramatic. That means we'd fall 800 points. Hey, but at least we have it on the charts. We can react to it. As I told people during the day, take partial to full profits, reduce your long positions, play selective, and we had great winners across the board, almost every single day, both in earnings as well as individual individual day trades during the day and swing trades, which are working out fine. In between a few losses here and there. That's the name of the game. So saying all that, it doesn't matter how smart I sound and how great these charts are. These are the 15-minute, 1-hour charts. These are the 15-minute charts that you guys are very accustomed to all through the day. And people who know how to track these and understand what these lines and all these structures mean, they're pretty simple to understand. They tend to manage their trades better. It's really as simple as that. But saying all that, what's going to happen tomorrow after the market opens? And remember, before the 10 a.m. speech, the text of I believe the text of his comments will be released. So the markets are going to be volatile from pre-market through 10 a.m. when he starts speaking. But I believe the text of the speech is released right pretty much at the market open around 9:30 a.m. So get ready for volatility. Fasten your seatbelts. We have reduced long positions. We have selective earnings winners which are going through the roof right now, like CRM, Intuit, which is up almost $12 or more than that. CRM is up about $10. Gap Stores is kind of flat, and Ross is down about $2. That's Ross Stores. So the point is that whatever happens tomorrow, and more importantly, whatever happens going forward, or whatever is happening right now, as tactical traders, we are always prepared. Now, sometimes it happens so quickly, we can react to it, but that's just the nature of the beast. Can't change that. I put out a poll out there for traders. 7 or 8 people responded. That's a really good sign. You know why that's a good sign? Because we have roughly about 100 plus members on average, and 7 people responded to my poll, which is great. That means there is no euphoria in the market. There is no desire to even comment on a poll which basically just wanted to get a feel of my members here at Clueless A Trading that I certainly respect and love. So that shows the apathy in the market. and the despair, and that's the one of the most fundamental pillars of the market. Markets don't create all-time highs. Bull markets don't end on despair and apathy, which is clearly being shown. And the poll that I put out there this afternoon, and 7 or 8 people responded, and thank you to them, just shows that there is a lot of apathy and despair, despite powerful profits that are being generated almost every single day. See, I can make things up because everything is put out on the real-time Twitter feed in the form of charts, alerts, ROI percentages, and anyone can fact check what the trades are. So that's a very good sign. Bull markets never end in a state of despair. Bull markets end in a state of euphoria and greed and excessive excitement. None of that is visible at this point. What does that mean? Does that mean we're going to straight rocket up? We're going to go to S&P 4,000? No, that simply means that we're going to grind our way higher. There are certain points of technical euphoria. When the market surged and hit 3,000 plus, I said we would get to 3,042, and we got to around 3,030, 3,040. Pretty much where I said it was going to go. And that was just at the beginning of August. When we hit the high, it was the 22nd of July. So there's technical euphoria at certain times. Sure, I understand that. But there is what we call overbought condition, excessive overbought condition. But there is no sign of any emotional engagement, passion, excitement by the average mom and pop investor or even traders. That is a contrarian buy signal. That simply means, and as I've shown on the charts repeatedly, and we're gonna show it tonight, the long-term charts which I put out there, the monthly chart on the market via the this one, for example, going back to 2007, that's 12 years ago. This doesn't look like a bear market. This is a friggin' bull market on every single technical aspect, whether it be the channels, whether it be the candlesticks. Look at that. So saying all that, what's going to happen tomorrow could be a vicious volatility. We could be down 400 points for that matter. What Chairman Powell is going to talk about, is going to say, I don't know, but I have an opinion on it. I don't think he's about to blast the market, given that some of he's a big nerd. If you listen to my previous webinars, when he talked about the fact that a couple of months ago, when the markets fell really hard back in October of 2018, or even here on May, he basically, I shouldn't say misspoke, he just speaks like a nerd. And the markets misunderstood what he was saying about the fact that he's looking to keep on raising rates in the face of economic weakness, and the markets fell. Then he corrected himself. And what was the term that he used? I'm trying to remember. Not in this meeting. This meeting, he used the word a mid-cycle adjustment. That simply means he's going to cut rates 1 or 2 times and it's all done with. Markets fell. It was actually rising the next day till good old Donald Trump, our boy Donald, comes out with a $10 billion tariff on the remainder of the Chinese goods, and then the market fell. But the last comment that he made in the previous meeting had to do with I forget. Anyway, and then he corrected himself. So the fact is that tomorrow, in my opinion, he's going to be very careful on his verbiage of what he's going to say. And I believe the message he's going to convey, despite the volatility that's going to come around as his text is released, as he speaks, and the volatility can be totally quantified in the form of this wide range that we are traveling in. So I know that if we fall where we can fall to, what we need to do, it's going to be very fast. You don't need to always react to it. You can just sit back. We have a couple of puts on the hedge as a hedge, which were down today. Fine, that's a hedge. That's an insurance policy. This is the range we're traveling in. I've shown that range in this chart. Right there. Right there. That range is 29.45 and 28.90. That's 55 points. 55 points or handles on the E-minis, or 55 S&P points multiplied by 7 or 8, right? We have a range of about 400 points that we can go back and forth tomorrow. We break this, then all hell breaks loose. We're going down to the 2800 level. So we know from these tactical charts that we can quantify the risk of what might happen. Markets are no longer a random walk through Wall Street that John Malkiel, the famous book that he wrote. Markets are totally algorithmic, high-frequency trading black boxes. I have structured these charts to a level of accuracy that they hit almost every single time. It even amazes me. It doesn't amaze me that, oh, I'm so smart that I can draw these things. I know where the markets are going. It amazes me how accurate the structures that I draw on the naked market charts, how accurate they are. And many of you are getting used to it. So you are more calm in the face of volatility. In fact, all of you should be calm in the face of volatility. We need to embrace volatility. Look, I'm not being an evangelist here about the market, but if you do not embrace volatility and understand these charts, then just take it like, you're probably not going to survive volatility. Otherwise, just buy my alerts and just sit there, because 7 or 8 out of 10 times, they're going to get there one way or the other. But in the meantime, it's going to feel like the earthquake is bringing the building down. And that's the truth. So tomorrow is going to be really critical. It is not, in my opinion, going to be a short-term top. But we shall see. I'd like to remind something. Jody, if you remember a couple of weeks ago, we did a week count on the weekly chart on the, this is the daily, this is the weekly, yeah. And if you remember, we arrived at a date when we thought approximately from a date count when the markets would be topping. Do you remember when it was? Because you're the one who helped me calculate it, and you said it.
Labor Day.
There you go. You heard it from Jody here. All right. Sometime around Labor Day. It's not going to be Labor Day, obviously, because you never short Labor Day weekend. We have known that for years. It's probably going to be sometime in the first week of September. I would say I would get 6th of September, maybe the Friday is the 6th of September, maybe by the 11th of September. Because remember, we always get intense volatility, just the way I said we would, in the middle of the month, the 15th plus minus 3 or 4 days. It's really as simple as that. When was the last time we didn't get volatility in the middle of the month? I could count on my hands maybe 3 or 4. There were 3 or 4 months when we didn't get intense pullbacks and severe volatility in the middle of the month. It's just the norm. There's a technical reason behind it. Listen to my past webinars, you'll find out what it is. But I would say by the first week of September going to the second week is when this market is going to really rock and turn lower. And we know how low it can go. We've been there. We have gone through 800-point crashes, and we have survived and made money on top of that. We have gotten hurt on certain days. We have picked up the pieces and run with it. And many of you are living testaments of how much money can be made. This was an 800-plus point drop, middle of the month, the 15th of August. And this going into the 16th. Markets bottomed, and see you later. Pull back, see you later. Range, and if things go right, tomorrow we're going to hit that 25, 29.55, 29.60 level, another 200 points or so to finish the week. Now, as a tactical trader, I'm not going to get into every single detail of logistics of how you need to run your books, trade your books, but you need to take profits. If you're opening up 10, 15, 20 handles on the S&P 500, what do? You just sit there? No, you bring your profit down, or your partial or full profits down, and then you re-enter the trades as needed, or some newer trades. Don't look at a gift horse in the mouth, ever. This is a game of realizing profits, not unrealized profits. Some people say, what do you mean? Some of the newer traders might say, well, unrealized profits is what you see on your P&L. Like you're up a couple of $100, you're up a couple of $1,000 on that trade. So what? It feels really good. Sure, it feels good, but the market can wipe it away from you in the first 10 minutes of trading. Have we not seen that? Sure. So you take it down, you realize the profits. In other words, you monetize your gains, not just look at it and lick your chops. Just the way Saddam Hussein was sitting there on 10, 15, 20 billion, or God knows how much he had in his palaces. And then came the shock and awe of the US invasion, and everything was gone. He should have realized his profits and just given in. He was an idiot. He should have conceded, surrendered, and he would have lived. Probably living in Florida, like all those South American dictators who do. Or Wisconsin, which a lot of Colombian mafia guys are sitting around probably. Okay? But no, he didn't realize his profits, and he made a serious tactical gamble, mistake, and it was all over. Iraq was done. Saddam Hussein was done. His sons were done, right? Just the market. Realize your profit. Monetize your profit. Feel good about it. First thing in the morning. Got a big earnings winner up 10, 12, 15%. Stock up 15%, like Target. Your calls are up 300+%. What do you do? Just sit there and look at your charts? Oh, I'm not going to take the profits. Sure, take the profits, move your strikes up with lesser amounts of money so you don't give it all back. Because the market, just like the shock and awe, the JDAM bombs falling from either B-52 bombers or the volatility algos will demolish you. Now, if you don't quite understand that concept, I'm always here to help. I'll work with you in advanced coaching sessions. I'll talk to you directly, but you got to take your trading in your own hands. So that's it. So that's the biggest event. There's nothing else to talk about. We do have the ECB meeting, from what I understand. I got to check that. I got to verify that. And I'm going to do that going to the site, Econoday, that all of you can use for free. And let's see what tomorrow is on the global calendar. And I'm going to bring it in right here, right here, right here. So tomorrow, and hopefully I'm not looking at wrong dates, or my good friend Mr. Harrington will correct me, because I was doing that on the last session. Tomorrow is Thursday. So what's the big thing on Thursday? What did we have today at 2 p.m., which was taken as pretty positive by the markets? Was the Fed FOMC minutes from the last meeting. Well, tomorrow is the European version, the European Central Bank minutes. That's going to be released at 7:30 a.m. Eastern Standard Time, New York time, my time. So there's going to be some volatility pre-market. Now, what are the Europeans doing? They are basically opening up. It's helicopter money. They're basically saying, we will do whatever it takes, lower rates to negative yields, to promote growth in the economy. Maybe it's going to work. Maybe it's going to not. Donald Trump here, good old President Trump, wants us to do the same. That's the stupidest idea I have ever heard. If I have a few brain cells left in my head, you want to push our U.S. rates down to negative yield, where you put 10-year government bonds and they say, oh, instead of giving you 1.6%, that's the rate right now, we're going to give you minus 0.5%. Oh, whoopee. That's really exciting. That means things are so bad, it's not even funny. Now, I know President Trump, for political reasons, is pushing the Fed to cut rates by 100 basis points and stuff. I'm not going to argue about that. He's the president. I'm not. But I personally think, and again, I have a right to disagree on this economic thing. I support a lot of things he does, as you guys know, but that's the stupidest idea ever, if I ever heard. And to keep on constantly pissing on Jerome Powell, constantly, like a schoolyard bully, is, again, in my opinion, and I think all of you would agree with me, because you guys know me, okay? I'm a real patriot, but honestly, is so childish, it's not even funny. But hey, that's President Trump's style, so I'm not going to argue with that. He's very smart. He's got a political agenda. Why he's doing that? He's not doing that at a whim. He's not waking up at 6 in the morning and then brushing his teeth saying, I'm going to really put out a tweet to blast Mr. Powell. No, I think he likes Jerome Powell a lot, but he's putting this is a sort of a political poker game going on, and he's doing that. Do I agree with it? I think it's totally stupid. Okay, enough said. So tomorrow is a European Central Bank. If I thought, let me just say one caveat. If I thought Jerome Powell was somebody who was hell-bent on destroying the U.S. economy, despite his nerdiness and this and that, okay, then I would take the other side. I would say, no, he's a bad man. But he's not. He's a good guy. All right? So pressuring him like that might have a negative effect, but he's not a vengeful guy either. He's a senior guy. He's a very, he's a Midwesterner, as far as I know. He's a straight up guy. And I don't think he has any vengeful, he probably just smirks. He probably just looks and rubs his forehead and says, oh my God, here it comes again, another tweet, another comment. But I don't think the political pressure and the childish tweets from President Trump against Jerome Powell, Federal Reserve Governor, that President Trump himself appointed, is going to make Chairman Powell all of a sudden turn into a vengeful idiot and do things wrong. I think he's going to keep on the straight and narrow and do whatever it takes, which he has said a dozen times, and Wall Street obviously likes to play a lot of games, which he has said he will do anything to promote U.S. growth. End of story. You guys decide. So tomorrow is the European ECB minutes, 7:30 a.m. So this is very, very, very important. 10 o'clock, which is consumer confidence, is when the Jackson Hole, as I said in my last thing, it doesn't show up under the economic indicators because it's not an economic indicator. That is a speech out of the Jackson Hole Economic Symposium. So this is the Jackson Hole speech tomorrow at 10 a.m. So guys, simple terms, get ready for real volatility. We have the charts to guide us so you don't completely fall over the cliff and just get demolished. Do not panic.
Hey,
yeah.
It's Friday tomorrow.
Yeah, it is Friday. What did I say?
You're going over Thursday.
Oh. Consumers comment. Yeah. So today, well, yeah, ECB minutes today. Okay. So Friday, I do apologize. Yeah. So losing track of here. So Friday, thank you for correcting me. So the new home sales data, and this will be the Jackson Hole thing. Thanks for correcting me. Believe me, so much stuff, that I have to publish and stuff, so I forget on that. Okay, because I was looking at this. All right. So correcting. So 10 o'clock tomorrow is the new home sales data, not that important. And this is where the Jackson Hole speech is. So we get ready for it. So Jackson Hole, Wyoming, Powell, Fed. Powell's speech. So I'm ready for heavy volatility. Futures are ramping right now, by the way. They're up almost 10 points. They're following the same trajectory that I showed on my charts repeatedly. So let's go back to the charts right now. And let's do this out. Thanks for correcting me on that. I'm like, look, I thought the ECB minutes were tomorrow, but we had so many trades and stuff going, didn't quite realize that. But they came out today, so obviously the markets were okay with it. So at this point, this is what we're looking at this is where we are with the overall markets. Let's look at the daily. So the daily, same stuff. Remember, keep it simple. We have a very nice stochastic, which is now entering the overbought zone. Not crazily overbought, but getting there. Getting there. We're in there right now as we speak. McClellan oscillator is not fully overbought, but getting there. Most importantly, this is the one that I'm looking at, and which many of you already know, the MACD. MACD crossover, told you, stay long, stay long, stay long. MACD crossover is going well, both on all different platforms that I use, and that's exactly what's going on. Last time this happened, the MACD crossover continued to ramp for a whole bunch of days. It just started. Is it going to be as high as this? That means we're going to have a multi-week rally? I don't know. But this is very, very good. You can see an acceleration of the histogram bars. It's very simple. A fifth grader can be taught these things without knowing a single thing about the market. And I know most of you understand what I'm talking about. The market's bottomed on a double bottom. This was still going higher. That was a positive divergence. Now we're green. Will these keep on expanding? That's what we want to see. So let's take a look at the external side, which is the charts. Let's get the lines out of here, clear the study set. And this is what's going on. It's kind of a mixed signal, okay? Because I'm not going to get overtly bullish. I'm tactically bullish. That's pretty much it. Somebody says, oh, we're going to go all the way to 3,000 plus. I have no idea yet. All I know is the 50-day moving average, and let me zoom in. The 50-day moving average is at 29.52. That's what I would say we get to. What happens after that, we shall see. Remember, the difference between clueless trading and all other great trading services out there, most of them say one thing: never predict, always trade what you see. Personally speaking, in this day and age where the new normal is structured volatility, how the heck do you trade what you see when by the time you see it, it's all over? You have to be somewhat predictive, and that's what we do like a robot. That's the reason when markets are down 177 points on the last half an hour, I say buy, because nothing technically has changed, and the next morning the markets open up 200 points. There has to be an element of predictability or predictive analytics. That's where you make the big money, because by the time you trade what you see, it's over. This ain't grandpa's market, with all due respect to grandpa and grandma. And I think all of you would agree with me on that. So that's a fundamental difference, one of the fundamental difference between clueless trading and the rest of the great services that are out there. You cannot just trade in this market what you see. I repeat, by the time you see it, it's over, because the algos are 100,000 times faster than you and me. So saying all that, let's draw this out. It's very simply. One can call this an ascending triangle. Once we break above the 29.50 level, or 29.49.95, whatever, 29.50 level, which is what the 50-day moving average is, we have a pretty clear shot at the lower Bollinger, which is at 3,017. I'm sorry, the upper Bollinger, which pretty much matches in what the previous high was. And it's going to be very fast, very quick, but I don't know yet. So I'm going to read the internals, which I just showed you guys, and the internals are suggesting that it gets there. Right there. Looking good. Percentage D line still hasn't gone over. It has to get up in the overbought zone, the orange line. This is not that important. The MACD, as I explained to you. So all these are pretty much showing, very simple read, guys, that we have a good probability of a move higher, ascending triangle included. We have a very, and you know my other charts have shown it repeatedly, so I'm not going to bother drawing all the lines here. We have a major support level at around 2760, 2770. Okay, this is where we are. Either it's a bear flag. Remember, a bear flag looks like this, right? Either this is a bear flag, in which case it's going to break down, and if it breaks down, it's going to, on a swing trade basis, it can come as low as 2800 again. That's another 700 points or 800 points, or it's going to break out and get towards this level. Taking these two things into account, and if you're purely mathematical, purely technical, it tells you that the construct and the weightings of these two indicators indicate that it will break, at least retest the 50-day moving average, if not attempt to break out. So that's really as simple as that. So tomorrow will determine if the markets do that. Now, before the markets do that, as you all know, they like to fake people out. So we might get a 300-point drop, then a reversal that brings the market up 300 and maybe another 100 points higher, i.e. a 400-point reversal. So tomorrow, just to show it, we could drop 200 to 300 points, let's say 200 points, and then rise 300 points to bring us somewhere in this zone. To be ready for that, I'm always here to guide. I've shown some phenomenal reversals, as you all know. If you're not actively trading, don't trade tomorrow. There's always another day. Don't push yourself. But if you want to play with a little bit of money, these type of moves, small amount of money can generate anywhere to 100 to 150% intraday on the SPY calls or puts. Right? So that's all. SPY calls or puts. Individual stocks will do what they do. Phenomenal winners. Take profits when the market opens on the big movers. Intuit, CRM. The Gap stores is kind of flat. It's a $17 stock. It really doesn't matter. Options are like dirt cheap. Ross Stores is down about $2. That, in my opinion, could be a very solid reversal play, like just the way TJ Maxx was, if you remember. And so that's where we stand. Now, let's take a look at three other charts, and then we'll click off. And in the meantime, by the way, and if you have any questions, feel free to ask me. So the longer term picture on the market, this is the long-term picture. This is the one you look at as you're sitting there having a nice cup of tea, coffee, having a nice cold, beer, glass of wine. In the case of my friend Jody, sitting somewhere in Europe, sipping some fine, liquor. So on his holidays, when you look at that, it's really a bullish chart. It really is. Only time it doesn't turn bullish is if we break below the 2780 level, and then we have this channel to contend with. But so far, it's good. So please don't have nightmares every night about the world falling apart. That's what the media keeps on talking about. That's what most people on stock twits and other trading forums that I monitor and I post on, most of them are just like, oh my God, this is it. The US is over, blah, 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 blah. And you guys know it. And that's good. You always need a high contingent of dogmatic bears in order to create the short squeezes, so their short positions keep on getting blasted, and these hedge funds who keep on shorting the market, including George Soros and the left-wing fanatics out of Europe, billionaires, they like to short the US markets every day that they wake up. Well, good for them because they keep on losing money. Other than a few times when the market's at 900, they just win a lottery ticket. But there's a lot of great American patriots who keep on shorting the U.S. market. So, like I said, God bless them. I hope they all lose, because I want the U.S. markets to go higher. Just the way President Trump wants the U.S. markets to go higher, I want the U.S. markets to go higher. And by the way, did you guys realize that he talked about Sam Dung today? Right? Sam Dung, because he sat with Tim Cook. I loved it. Because like I said, if you have a Samsung phone, no offense, man. All right? Burn it, give it away, break it, and buy an iPhone. Buy American. And that's why Tim Cook is one of the favorite business leaders of President Trump. And good for that. Enough of the Samsung crap. Saying all that, this is your weekly. The weekly looks pretty good too. You can see the technicals. I'm not going to, everything is depicted there. All you have to open your eyes and look at it. So far, we have the long tail, major long tail. This was a massive move, 500-point move on the market or more, right? And then this is today. So far, so good. Nothing is showing anything that nothing. There's no technical damage, and this is the zone that the market has to get above. This big breakout zone that took months to break out of, right? Right here. This was back in October of 2018. This was May of 2019. This was June of 2019. And I think that's what we get to. So great. If we get to 2960, we're talking about another 200 points or so. And then we see what happens. Here's the bearish standpoint. And I think many of you who are now with all my help and with your own efforts understand what pattern this is. So if I show this pattern here, many of you will say, hey, I see it. But this is a head. This is a left shoulder. This is a left shoulder. These are macro. That means it spans months, right? This is the right shoulder. So this level here at around 2960 or so, another 200 to 300 points up from where we are on the Dow Jones Industrial Average, is massive resistance because this head is still intact. That's a triple top, quadruple top on the market. Left shoulder, right shoulder. Remember, many of you have become so adept at reading charts because of the advanced coaching sessions, as well as staying with Clueless Day Trading for months and understanding this. You can beat the pants out of all these guys who come on CNBC and stuff and explain the basics of technical analysis that we teach people on first grade. You guys have heard them. They know, oh, this is an inverse head and shoulder, blah, blah, blah. And their charts are so basic, so minimal, it's almost pathetic. You've seen that. And these are great guys. They know what they're talking about. Look at their charts, though. Like a simple chart, no lines drawn. They're like, oh, here's the inverse head and shoulder, as if it's that easy. Do they ever show the internals? Almost never. The internals are what drives the market. The internals, ladies and gentlemen. So that's it. So once we cross this, I don't know yet. God tells me that if the Powell thing goes right tomorrow, we're going to cross into the overbought zone and we're going to overshoot. And that overshoot should bring us somewhere in that 3,000 level or on the S&P 500. Yeah, in the 3,000 level. But this is a very serious head, left shoulder, right shoulder. The candles are looking good, but don't forget, if you want to look at it like that, they're still sloping down. We need to break out of that. We need a CIT or change in trend. We don't get a change. We do not get a change in trend unless we cross over the 2960 mark, which is roughly about 300 points higher. And we need to close above that. Is that clear, Jody, Mike? That's 300 points on the Dow Jones Industrial Average, I mean.
Yes.
Perfect, guys. You guys excite me, man, because, end of the evening, like I do these webinars, I have to explain all this stuff, which is already sort of my second nature, and it kind of reminds me, like, guys, we can do it. So thank you. And everyone else who's going to listen to it. So that's your weekly chart. Now look at the daily chart. The daily chart is actually more constructive. We have a beautiful crossover that I've been talking about for days. Last time this crossed over and the histograms went, the histogram area, I didn't put the bars, this is the area, went so highly positive. If that happens, we are going to hit 3017 if it does what it did back in June. I have no idea if it's going to do that. One can call this a massive W. Yeah, you can. But then at the same time, like I explained, I like to look at both sides. Remember, when you're dealing with your economic enemy or your mortal enemy, whatever, you have to know what your enemy is all about. Know thy enemy. Your enemy are the algorithmic high-frequency trading programs, and and more generally speaking, the dogmatic shorts. Those are our enemies. period. I don't like shorts. I don't like people who always want the downfall of the U.S. financial markets, i.e. the downfall of the U.S. economy. I don't like it. And I have enough grounds to fight them on every economic argument they can give me. Yet, time to time, I will be tactically bearish, so will be my members. But in general, you cannot be dogmatically bearish and always be negative on the U.S. economy. You cannot. Not on my service. Do it. Take my stuff and go all the way against me. Net, you'll lose. Time to time, you'll win. But that doesn't mean we can't go short. So that's the reason why we follow these technical charts. So bottom line is our enemy are the algorithmic high frequency trading dogmatically short programs. Dogmatic. That means they're always negative on the US markets. So this could be this. The big fat red line is your 50-day moving average. We need to cross that. We need to cross that. We have attempted to cross it lots of times. If we fail to cross it, the market will pull back. We are back to 2,900. We are back to 2,841, back to these major support levels. We have to break out of this. Will it happen? I don't know yet. So far, technicals say yes. There'll be a lot of fake outs along the way. We are about to get severely overbought. Maybe a couple of days. As my good friend Jody says, as we did the week count weeks ago, Labor Day and a few days after that, the week of Labor Day weekend. So Monday is a holiday, Jody, right?
Yes.
Obviously, yeah, there you go. Yeah, thanks for reminding me because I'm just like clueless about this stuff. So bottom line is that that week, the markets might top. Mark my words. And Apple has their developer conference, isn't it, that week? Where they introduce all the new phones and the MacBooks and stuff. And generally, the market tends to top on the Apple developer conference, introduction of the new products. I believe it's around the 6th or something. So that's really as simple as that. In the meantime, I'm just looking at shots of the market. I play the market in 200 to 400 point increments, just the way I like playing the Amazons on $10, $20 increments. I like to play the SPYs on 3-4 point increments. I like playing the Microns in $1 or $2 increments, or Nvidia on a $3, $4, $5, $6, $7, $8, $9, $10 increments, or an Apple on a $1 to $4 increments. I am playing the market on 10, 15 points on the S&P 500 and 100 or 200 to 400 points on the max on the Dow Jones Industrial Average. That's the way a tactical trader should approach the market. There is no straight line up. There is no straight line down. Even if we're going to go all the frigging way down to 2,700, which I think might happen in the month of September, by the way, just so you know. Before that, we could do this and then this. But it's not going to be a straight line. So that's your daily. In the meantime, for people who are actively trading or managing their trades actively, you don't always have to be an active trader. As long as you're managing your trades actively. By the way, Globex futures right now are out about 10. Follow these charts. This is the big cup and handles. This is a large cup with a consolidation channel. It's a handle. This is a large cup. Walked you guys all through it. A handle. So net, if the world purely ran on pure technicals and not other extraneous factors, then we are going to go up here because it's going to break out just the way it broke out here. It was going to go higher till we had that $10 billion tariff treat, right? Or something else that happened that time. Forget, because it was just like so many things. So that's it. So these cups are still valid. The handle's still valid. Once we break below this, you don't need me. Just short the market all the way down to 2860. If we break above it, if you're short, forget it. If you're long, keep on adding because the market's just going to move really fast and furious. So that's your swing and day trading chart. This is your same thing, much more detailed version. It's a 15-minute. Look how accurate these lines are. This is the 50 fib. I told you guys just the other day on the 20th, as the markets were pulling back, I said, relax. Look at my tweets. It's going to fill this gap. We shorted the market a bit, closed out the puts, and guess what it did? It closed the gap right after hours, and then see you later. So today I expect it to actually come down to the gap, but it didn't. It came down to the last breakdown level, this green line here, and then it bounced from here. I was expecting it to come down here. So the puts that we bought, the really cheap ones, they were down 50%. Big deal. That's why it's an insurance hedge. Just the way the Fed talks about insurance rate cuts, just in case. So just in case, have a couple of VIX calls, buy a couple of SPY puts. If they don't work out, that means all your longs on the other side, which is the majority of your position, are going to go a lot higher. I like it when my small hedges go down. That means the rest of my P&L is going higher because all the long positions are going higher. Don't take any wild one-way bets, please. Not on the long side, not on the short side. Not right now, guys. You want to take a long shot bet in a big way, you want to buy these levels and just say, that's it, I'm putting a crap load of money and I'm just going to ride the wave and it lasts for a whole bunch of days. But not around here. Here, we could very well be doing this. It's a big range. Okay? So don't take any big bet on one side or another. Selective positions, scalp your trades. There'll be a couple of runners in a big way in runs. Like the CETX, we bought it at $2.40 or 50, 60 cents. It went down to $1.60. CETX. It came back to 230 today, ended at 215, up 20% for the day. I just bought this common stock. We're not playing options on that. That's a spec play, right? Centric's view. Charts look like it still wants to go to 4. I'll double my money. I bought as low as $1.60. And that has nothing to do with the market, by the way. I mean, the overall market. So I think that's about it. Two things I want to show you guys. One is my favorite SPX 533 chart, which is still looking good for a couple of reasons. One, histograms. We have the first green histogram in positive. I would like it to expand like a wild mushroom or whatever you want to call it. And in that case, we are going to get up over into the 3020 range. But this is the first sign, second day of the green histogram. I like it. Stochastics crossover, and so far so good. Nothing about it. And again, I repeat, we need to cross the 50-day moving average. This is good. Let's take a look at the McClellan oscillator, the big daddy of all. What is this telling us? Honestly, it's kind of telling us we're getting overbought. We're not there yet. This is very positive. The MACD. This is positive, the full stochastics, because it can either go sideways or if things go down, then it's going to pull back. So this is a mixed picture. My bet is it goes sideways like it did here and the markets ramp up more for a couple of days. So looking at the area or the overall, we were down to minus 52, minus 79, buy hands down. And we did. We didn't buy hands down. We bought selectively. Because of volatility in the market, we need to be a little bit more defensive, a little bit more cautious, right? More cash on the sidelines. Always have to have cash on the sidelines. So this is telling us we still have room to move up to the upper Bollinger. RSI is still pretty good. So that's it, guys. Gave you the psychological picture, gave you the Powell picture, gave you the Donald Trump picture. And there's nothing to it. Any questions, Jody, Mike?
No.
Talking about individual stocks, you know what we're doing. We are making a crap load on things like Boeing and a whole bunch of other stocks like Target. But Boeing, my friends, I don't need to even show the chart here because it's all on my Twitter feed. That stock can go a lot higher. And that headline that came from Boeing, that they're increasing their production numbers, for the 737, the most hated plane in the universe, as if Boeing rigged the plane, right? It's so idiotically stupid. So let me just show, and the fact that they're increasing the production. So what do you think is going on? They are going to be up in the air, and every airline in the world, which Boeing is the finest aircraft manufacturer in the world. Airbus is the biggest competitor out of Europe, and Airbus is fantastic too. I don't know if you've ever been to A300. Those are wide-bodied monsters. But Boeing is the best. Just the way, dump your Samsung and buy the frigging iPhone. And the new iPhone Pro's coming out in September. Buy that one. All right? I'm going to have a contest. And I'm going to figure out what the contest is. And on that contest, 3 of my members are going to win 3 of the latest iPhone Pros. I'm going to do it just to promote Apple. Made in America. I'm dead serious. And you better all. It could be a raffle. I think I'll do a raffle. I'll do a raffle. And 3 of you will get 3 of the large screen iPhone Pros, which are the Lamborghinis of phones. And then you'll say, you know what? Let me return my Samsung. So, all right. So let's talk about it. I'm dead serious. We're gonna do a raffle on the iPhone Pro after they announce it in September, and we're gonna do and 3 lucky Clueless A Trading members are gonna win 3 iPhone Pros. And the raffle is gonna be very moderate, but I need everyone to participate in it, and it'll be fantastic. Okay, saying all that, this is one goddamn good-looking chart. Look, we've made a decent sum of money on Boeing. We have been caught in some Boeing traps on the pullback and stuff. But I'm telling you guys, this is beautiful. The calls were $1.90. They went to almost $10 frigging dollars. They were up 800, 700% in one day. This is the way I look at it. This is Boeing's trading range. It's 380. Oops, let me change this down. 380 on a major gap fill right here, right? Let me zoom in. Boeing excites me, not just because I love the company, Mullen Cap and stuff, but it's just an exciting chart. It's a very volatile, structured chart. It looks nothing like other charts that we trade. And I love great companies that fall out of favor and everyone just pisses on them all day long. You don't hear one good thing about Boeing from anybody. Great, you want to buy it. It's really as simple as that, okay? Buy the crap out of a great company that is fixing itself, just the way Chipotle, when rats were falling off and there was salmonella poisoning and God knows what was going on, and the stock was at $250, and everyone said, that's it, it's the end of Chipotle, and the stock is closing into $800 to $900. Boeing is the next Chipotle for long-term investors. Mark my words. Buy a leap a year out. A long-term option. Mark my words. All right? This is the industrial aeronautics Chipotle. Boeing. Because that's it. Just telling you right now, guys. And in the meantime, you get a lot of money trading it, but treat it as a real investment. So bottom line is there is your trading range. The trading range is 380 to approximately 320 on the worst case scenario. That's 60 points. That's it. It's going to hit 380. It's going to pull back. Right now, massive bullish engulfing candle crossing over the 50-day moving average. Over the 50-day moving average, ladies and gentlemen. And I'll show you the internals, which are super positive. I told you guys to buy it yesterday on this candle. One of our newer members said, hey, what's the angle? I said, no angle. It's a technical angle. And then I did one of my complimentary sessions with him. He's a new member, great guy. And I explained to him why I did it. He goes, wow. And he wish he bought it. Maybe he did. Because he would be like, wow. Calls went from $1.80 to 9 what? the 350 calls to $10? That's like 800%, 700% net on one candle buy. And by the time I bought it, the stock was already up 9 when I said buy. Because I looked at the screen and said, why didn't they give me an alert? And it was like, good. Looked at it. I said, that's it. I'm going in. I put the alert out at around 12:15 p.m. yesterday. Buy it. It was around $2. End of the day, it was around $1.70. Today, went as high as 10 plus. Guys, time, hashtag time to grow up. Who couldn't afford to buy one call or 2 calls at $2? Forget it. It's not what you did wrong yesterday. It's what you can do right tomorrow. That's the way your motto should be. You are not a prisoner of your past. That was a lesson. You are not a life sentence. It's not a life sentence, what you did wrong before. But only if you act and change the way you behave in trading and you behave way you look at the markets. You cannot keep on being a prisoner of your past. Then it becomes a life sentence. You never win. Even if you buy a great trade, you sell too early or you sell for a loss. Don't do that. Do not be a prisoner of your past demons because you did things the wrong way. Saying all that, it's damn good. Cross over the 50-day moving average. Yeah, it's going to basically stop and start along the way. I can almost assure you, regardless of anything in the market, because remember, Boeing is so undervalued right now overall. You got a lot of points. And I love the fact that the Boeing calls really move. They're so elastic, the delta, the gamma, right? The stock moves up $1, the options go up 5%. It's not like a biotech stock where the stock is up $5 and the options are still sitting there like, knitting a sweater, and then all of a sudden they wake up. These are highly elastic to the price. As the price moves, the options moves. That means you make more profits. So I love it. I love it. Will there be? I want a little pullback, if you ask me. I want the stock to maybe pull back 3 or 4 points. Whichever the case, it's going to 380. Buy it a month out. There's your trading range. Don't have to be like a wild technical guy, like, oh, what am I reading? No, it's really quite simple. There's your trading range. If it breaks above that, there's your big frigging gap, 400. At 400, believe me, every single bozo who hated Boeing on CNBC and Fox Channel and Bloomberg and stuff goes, oh, we love Boeing. Oh, it's a great company. Because those idiots were never here like we are asking you to take positions. Idiots going to be all upgrading the stock here, at which case the Boeing will hit a new high. Why not buy the stock at these low levels, small amounts, and buy time? On that note, respect all of you guys. I just need 2 things from all of you. 1, I need referrals to grow our community. 2, I need every one of you to follow the Instagram channel. I put the Boeing sequence on the Instagram channel today. It's brilliant. And Jody, thank you for visiting the Instagram channel and hitting the likes and stuff. Our follower count's almost hitting 600. That's fantastic. I should be hitting 1,000 followers very soon. And once the algos pick Real Estate Trading up, the Facebook algos and stuff, we should be getting all the way up there. So please spread the word. Doesn't cost you a penny. Tell your friends to follow anybody. Stop somebody on the screen and say, hi, do you know Frank? They'll say, what? Real Estate Trading. Follow him on Instagram. They'll love what we do. We need referrals. We need to grow the community. We have had a couple of weak members who came in, and despite all my great trades and my great forecast, they canceled. Great for them. That's business. I harbor no ill will to any of them. I feel sad for them. All these great winners, all these great sessions, everything, and then they cancel. What am I going to say? Let the weak perish. Let the strong survive. Carpe diem. Seize the moment. I'm always here to help and guide you guys as best to my abilities. And thank you again for being at Real Estate Trading. Have a great evening, guys. God bless you all.